makers and market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. I'm Guy Johnson in London. Francine is off today, but let me tell you what's coming up on today's programme. The ECB is poised to cut interest rates for the first time in almost 5 years. We're going to take you live to Frankfurt for that event. European stocks rising ahead of that ECB decision. Tech leading the gains. This after we saw fresh record highs on Wall Street last night. ASML is leapfrogging LVMH to become the second most valuable stock here in Europe. Nvidia has now overtaken Apple. Plus, veterans and world leaders commemorate the 80th anniversary of the D-Day landings in Normandy. We are going to continue to bring you live pictures from northern France throughout the programme. Before we do all that, let me just take you to the markets and talk a little bit about what is happening right now. Equity markets generally reasonably well bid across Europe. The Danish market has returned, so we're seeing Novo Nordisk rising quite sharply as well today. That's why you're seeing Denmark outperforming today. But the DAX is up by 1% today. Tech stocks are doing relatively well. The CAC is up by 0.3%. The FTSE 100, a little bit of a laggard, only up by 0.1%. But European equity markets continue their move higher alongside what we're seeing in the United States as well. Claims data a little bit later out of the US, building up to the payrolls number, of course, tomorrow. We are watching today the ECB. S&P futures at the moment fairly unched. We'll see if they gain a little bit of momentum. We are seeing the 10-year on offer today, so yields are rising just a touch. But generally, the narrative over the last few days has been yields lower. The euro fairly flat. We wait to see exactly what that decision looks like coming out of the ECB. We know what the decision today is, but what are the projections going to be, and when does the next rate cut come? Crude a little higher today, up by 0.9%. We continue to digest, obviously, the decision out of OPEC earlier on this week. I want to take you first to Frankfurt, though, in today's show. That is where the main event from a financial market point of view today is. The ECB is expected to kick off its rate-cutting cycle. Is it going to be a cycle, I think, is maybe a critical question. And we're going to see maybe the ECB going before the Federal Reserve. That hasn't happened. Well, it hasn't happened ever. So despite the bumpy retreat in price growth, in inflation here in Europe, Christine Lagarde declared in May that inflation is under control. But the latest data maybe calls that into question. But she's committed to this June cut. So the critical question is, what comes next? So let's talk about this. Let's go to Frankfurt. Let's go to the ECB. Lizzie Burton joins us from there. She's going to be covering this event for us today. Lizzie, you're inside the building. You're not inside the room. So what is happening inside the room? Set us up right now for this debate that is taking place on the Governing Council.
Well, Christine Lagarde is inside the room, so is Robert Holtzmann. We've seen them entering the ECB. She did not want to cut rates before the Federal Reserve guy, but it looks like she's going to today. She's telegraphed it well. It's fully priced into markets, and economists almost unanimously expect this quarter-point cut to 3.75%. But as you say, that's not the focus. The focus is the rate path beyond this June meeting, because we've had this recent economic data muddying the waters, rapid wage growth. We've had inflation sticky and output surprisingly robust. Officials for Northern Europe particularly concerned and wanting some caution here, and therefore traders paring their bets. They are now expecting 2 cuts this year, unlike economists seeing 3. We've also had a bit of warning from some of the Governing Council members, the likes of Joachim Nagel and Isabel Schnabel, kind of ruling out a July cut, and Robert Holtzmann saying that he expects only 2 cuts for the rest of 2024. So, as you say, very important to focus on those forecasts, in terms of clues for the path ahead. Yeah. Look particularly at whether there's an upward revision for inflation in 2026. That would be potentially a sign that there's going to be a high bar for cuts coming forward.
Lizzie, there was this view that the ECB and the Fed were now on very different paths. The Fed was dealing with inflation and was unlikely maybe to deliver many cuts this year. The ECB felt like it maybe had an easier decision in some ways because inflation was coming down as the energy crisis abated. The picture's starting to look a little bit more nuanced.
It really is, and think back to the start of the year, the end of last year, the pivot party that Jay Powell kicked off. We did not think we would be in this position where actually it was Christine Lagarde buying drinks for everyone at the bar, as we were putting it back then. But yes, the picture so different now. The origins of the crises were different. You had in the US the fiscal stimulus, and in Europe the energy crisis after Russia's invasion of Ukraine. But at this point, parallels drawn because of the difficulties of taming inflation right down to target, as shown in that economic data recently that I mentioned. And so it could be that actually, Guy, we don't see as much divergence as even we thought last meeting between the ECB and the Federal Reserve, which of course is crucial for the market impact. Perhaps we don't see as much euro-dollar weakness. That very much will depend on Christine Lagarde's clarity about the path ahead in the press conference half an hour after the decision later.
We'll bring you that press conference live a little bit later. Lizzie, thank you very much indeed. You're going to be driving our coverage throughout the morning as we build up to that event. Lizzie Burden in Frankfurt for us. Remember, we get the decision 1:15. We get, as Lizzie was saying, the press conference 30 minutes after that with the President Christine Lagarde. That is going to be a must-watch event today. And, of course, there's going to be the Markets Live coverage plus the top live coverage that you'll be able to access on your Bloomberg terminal. Let's talk about that coverage and what we're going to be maybe hearing within it. Noor Al-Ali joins us now from the Bloomberg Markets team to walk us through what she's anticipating, what the team's anticipating. I'm quite excited about this, not because we're going to get a rate decision today, and it's the first time we've seen a rate decision, the depot rate being cut, but because I'm really curious to see how Christine Lagarde plays it. She's got a really difficult conundrum now in front of her, and I'm just wondering how she's going to navigate it.
Guy, I'm equally as excited. I know that, if you look at implied volatility for the euro, it's looking like a snooze fest today for the FX market.
It's picked up a little bit.
It has picked up a little bit, and I'm really excited about that. I think it should pick up a lot more because this is the day, right? We are expecting the European Central Bank to cut interest rates before the Fed for the first time ever. This is a historical moment. Now, I know that down the line there's a lot of uncertainty or unclarity, but the projections from the ECB are going to be quite interesting. What they do as well with the balance sheet and the PEP reinvestments is also very interesting. And reminder, we have jobs data tomorrow, CPI US next week, and FOMC meetings. So this is an incredibly exciting week that's setting up the tone for the markets into the summer.
But the macro is a little uncertain right now, and we're watching the data really carefully. Got claims coming up a little bit later. As you say, we get into payrolls and then into CPI over in the United States. But the equity markets just keep powering higher. And there was this kind of narrative at the beginning of this year that equity markets could power higher because rates were being cut. And we saw the December pivot, and then equity markets took off. And it seemed to be on this narrative that as rates came down, that would be positive for equities. That's completely flipped on its head. I'm struggling to understand the relationship between kind of rate expectations and the equity market at the moment, because it's been a random walk this year.
Yeah, absolutely. But look, maybe it's not so random, right? Because we've been talking about how there's this momentum in stocks that we've not seen in quite some time. And it's really almost, I would say, crazy to go against that, right? Stocks have been rising. Nvidia now topping Apple's market share. We're, approaching those record levels again. The S&P 500 hitting fresh records time and time again this year. And if you look at both ends of the spectrum, so if the Fed doesn't cut rates because the economy is doing so well and it's going in that full momentum, then stocks are going to do very well, right? Because that's earnings yields doing well.
But the bond market's beginning to sniff out something a little bit different. The bond market's telling me a different story. If I listen to the sounds coming out of the bond market, it doesn't sound quite the positive narrative you just laid out.
Absolutely. And if you look at the 60-40 portfolio, you'll see that stocks and bonds had been kind of moving in the same direction for quite some time, which doesn't offer that diversification that investors were seeking. So potentially now, oddly so, stocks are looking to give in that diversification. But let's say the Fed does cut rates, then what happens to stocks then? They rise again. So I think...
But why are they cutting rates, I guess, is that we don't, that'll be the question. If this is a kind of mid-cycle slowdown narrative, that kind of makes sense. But if this is a recession coming, that's a different story.
That's very concerning, right? And we had Simon White recently point to the fact that, we could get another meltdown in another, bank or another company similar to the one that we've seen in SVB last year. And if that happens, all bets are off.
All bets are off. Nora Ali joining us from our Markets Live team. Thank you very much indeed. We're going to have some great coverage coming up throughout the show, throughout today's coverage of the ECB. We're also, let's not forget this, we've also got the day 2 of the Super Return Conference that is taking place in Berlin. We're going to be speaking exclusively, we're going to be hearing exclusively from Johanna Barr, Global Head of Limited Partner Services at Advent International. That's coming from Super Return a little bit later on in the programme. Really looking forward to that conversation. This is Bloomberg. Welcome back. It is, of course, the 6th of June, the 80th anniversary of D-Day. The President of the United States, Marine One, just touching down in northern France as he makes his way to the American cemetery just behind the beaches where 80 years ago today we saw some of the fiercest fighting of the Second World War. The President arriving with the First Lady to commemorate that event. You can just see the delegation leaving Marine One. We'll continue to monitor events, bring you all the live pictures from the events that are taking place in northern France. So we'll see very shortly, maybe not from that helicopter, maybe from another helicopter, the President arriving. Maybe his helicopter is just beginning to touch down now. Anyway, we'll continue to bring you those pictures. I can see under the corner of my eye, the President is now just touching down. Air Force Marine One just landing now. The second helicopter in on the pad. We will continue to bring you those pictures, as I say, as the President arrives in northern France. I want to take you to Berlin now, where we see the Super Return Conference taking place, day 2 of that event. Danny Berger's had some great guests, and that continues this morning. Danny, over to you.
Thanks, Guy. Regret to inform you, no helicopters here, but plenty of heavy hitters. I'm really pleased to say that joining me this morning is Johanna Barr, Managing Director and Global Head of Limited Partner Services at Advent International, a giant in its own right in private equity. Johanna, thank you so much for joining this morning.
Thank you, Danny, for having me.
So you spent essentially the last 24 hours, let's call it a speed dating process, where you've met with investors, LP, nonstop. What's the mood you've gotten?
I think the mood, maybe somewhat surprisingly, is actually a lot lighter than it was 12 months ago. So investors, I think, are feeling a little bit better about life. They're seeing some distributions coming back. We've had a number of LPs who are a bit more active on the smaller end of the market, saying that their year-to-date distributions are already matching what they had last year. And so I think that's all good news for the industry. And
we'll talk about the distributions in a moment, because I know that's been a sticking point for this industry. They're happier, but are there any still of those risks lingering, especially because we're still living in a higher rate environment? That threat hasn't gone away.
That's true, and I think it's down to the private equity firms like ourselves and how we navigate that environment, especially with our existing portfolio and some of the older portfolio companies we have in that portfolio. But I think on that side too, the credit markets have become much more favorable, and what you're seeing is the ability of managers to reprice some of the debt in our portfolio companies and also significantly reduce the burden of the interest rate expense of our portfolio companies.
So the debt burden's lessening, returns are coming back. There was this great Bloomberg story that we had. It was at a big investor meeting for a private equity fund, and someone was wearing a T-shirt that said DPI is the new IRR, which of course is just a way of saying that getting your money back to investors is more important than returns. Are you also getting that sense that at this moment people are saying, look, we can forego a little bit of the juice from returns in order to get cash back?
I think investors still want to see absolute good returns. So I think you can't reduce your return threshold, but I think they want to see the money sooner rather than later. And so ultimately there has been a bit of delay in the exit pipeline during, partly as a result of COVID and then the inflationary environment that followed. But I think investors are really pressing now and saying, okay, you've got a mature portfolio in some cases, how are you going to move that to exit?
And the exits mostly, though, have happened with quality companies. That's what we've seen trading.
Yeah.
What finally gets those lower quality companies to have firms exit, to see them sell it? Because that's kind of what we're waiting on at this moment.
I think even with those companies that are maybe not sort of the crown jewels in invest in GPs' portfolios, I think the interest rate environment settling now, we're all expecting a rate cut today from the ECB. I think that gives investors clarity around how to manage the future of their portfolio and to price certain things in. And so ultimately the price finding mechanism will prevail here, and I think even those assets will start to trade. The other point I'd make on the exit, though, what we found is that where you do have a portfolio which you can sell to trade buyers, I think that's been very strong in terms of exits. So also from an Advent perspective, if I look at what's worked in 2023, we had a very strong exit year with above $8 billion of realizations, but the majority of those exits came from sales to trade.
How many questions are you getting about AI in your AI strategies and portfolio companies?
Not as many, actually, as this time last year. So really? This time last year, everybody wants to understand AI and what it really means and what the threat to the portfolio would be. I think this time around, they're more interested to your question around what are the portfolio companies doing with AI? How are they benefiting from that? And
do you think it's hype that's died down? Is that what you're saying?
It's not hype that's died down. I think people are sort of realizing it's not going to happen overnight. But I think where the answers that we are giving is where a portfolio company has a real, let's say, treasure chest of data that's really unique to them, and if they can now apply AI tools to that, that's where the real value comes from.
Johanna, also when we did this last year and we spoke, it was a period for private equity, private capital, where fundraising was challenged. It was much about what we were talking about, this idea that exits were happening, so LPs didn't want to allocate more cash. Mm-hmm. What does it look like now? Has that fundraising iciness for the industry started to thaw?
I think that's certainly what everybody's hoping at this conference this week. I do think fundraising will get a little bit better from here on in. It was an extremely challenging, I think, already second half of 2022, extremely challenging 23. But I think as we go into 24 and 25 in particular, we are hearing from investors that budgets are improving because of some of those distributions have come back. Also, public markets have recovered nicely, so some of the denominator issues have improved, and so the whole equation is improving. On top of that, you do have a number of programs who continue to see real value in the asset class and are increasing their absolute allocation to alternatives, and that's also helping the industry.
So Scott Kleiman yesterday, speaking to our Jan Henrik on a panel, basically said, I'm here to say that not everything is okay, that we had an over-deployment in the early days after COVID. People bought too much at too high valuations. Would you agree with that maybe not everything is okay?
Yeah, I mean, look, you have to look into your own portfolios and be critical of kind of some of the, what are the investment decisions that were made, what are the prices those were made at, and realize that for some portfolio companies you have to grow into some of the multiples that were paid at the peak of the market. But as long as you've gone in with a real value creation plan around what you were going to do, and you continue to execute on that operationally, I'd argue on the whole these portfolios will do very well.
So you have to do the hard work again.
You have to do the hard work. But look, this is what private equity should be about. If you go back all the way to 2007, we used to have a high interest rate environment. We used to have high prices. And if you look at those vintages, even the GFC vintages have done actually pretty well in the end. And so I think we need to believe in our own operational capabilities to see through these portfolio companies.
It's funny how we sometimes have a short memory that way. Johanna, thank you so much for joining this morning. Really appreciate your time. Enjoy the rest of the conference. Guy, that was Johanna Barr of Advent International.
Great conversation, Danny. So many great conversations coming out of that event. Thank you very much indeed. We're not done with Super Return, though. Peter Stavros, co-head of private equity at KKR, is going to be joining us. And we've got this, an exclusive conversation with Orlando Bravo, co-founder, of course, of Thoma Bravo. Those conversations coming up throughout the day. Some great conversations already out of Super Return, many more still to come. What are we going to do next? I want to take you back to the elections that are taking place in the EU over the next few days. We're going to take you to Berlin again for the latest on that story. This is Bloomberg. It is June the 6th, 80 years ago today, D-Day was underway. You're looking at live pictures coming from the American cemetery just behind Omaha Beach. The President of the United States has just arrived. This on the day when we start to see votes being cast across Europe in the EU elections. I want to draw a line between these two events. Ollie Crook now joins us now from Berlin. Ollie, draw that line for me. Europe is facing a significant security threat. This is 80 years ago. We saw the D-Day invasion. Draw a line between these two events.
Yeah, so Guy, I mean, obviously defense is going to be top of the agenda for this EU election, how basically the Europeans will build out their defense apparatus. And that is going to be one of the sort of main things that Europe needs to figure out going forward. Will there be joint debt? Will they support Ukraine to the same degree? There's some debate about that. But Guy, if we also think, just step back philosophically, the EU was born out of this conflict. And the real question is that the 20th century EU is all about keeping peace and harmony, economic prosperity. What is the 21st century EU? And this is the question of a bloc of countries, one of the richest in the nation, that need to go up against the United States and China and remain relevant economically and continue to pursue their objectives. And that is what the EU Parliament will define for the next 5 years.
Ollie, thank you very much indeed. Rishi Sunak, the British Prime Minister, the current British Prime Minister, is in Normandy. We're going to talk about the UK election next. John Caldwell, a donor to the Conservative Party in the past, is he thinking of switching sides? We'll find out next. This is Bloomberg.